Welcome to Friday. It's March 22, 8:52 a.m. Eastern. Here are four levels that we will trade against in the E-mini futures, and I want to point out that because it's Friday, the end of the week, the line in the sand comes into play. That was 518.50 or is 518.50. So whether the spiders close around that level, above it, below it, is, in my opinion, indicative of where future price action might lie. If they stay above it pretty solidly and healthily, then either it's a fake out or they're going to continue to go sideways to higher. If they close quite a bit below that number, then likely we'll have a rollover and some type of correction and price is going to go lower. But it could take another week or so. But anyway, that to me is a line in the sand. It's a pretty important level. And we will take a look after the market closes this afternoon at all of that, but especially any trades taken here at these levels, assuming the spiders hit these levels and trigger trades in the E-mini futures. But let's just take a look at the longer time frame charts this afternoon after the market closes. See you then. Well, they didn't do very much today. Essentially, they went sideways all day and ended up closing toward the lows of the day. Some sellers jumped in right at the end of the session, pushed price down a little, but certainly not enough action during the overall trading day to make anything of this. On all the larger time frames, the spiders were above or are above all the moving averages. I did notice on the 1 hour chart, they worked their way sideways back to meet up with the 20 period moving average. We'll look at those later. Meanwhile, where was the trade today? You can see that one level was hit, and the trade was a short position at 522.15, taken around 10 o'clock. And we'll take a look at that trade as it played out in real time. I'll let the recording run from when it started right after 9:45 a.m. You can see where I added a manual trade at a limit price on the E-mini chart in the vicinity of 522.10 when they got up there. By now, you should probably know that I factor in a 5-cent buffer at most levels. This allows me to grab more trades by being prepared to trigger trades in front of the calculated level. Sometimes there are front runners that start the reaction early. In those cases, the trade would not be triggered if I relied only on the exact calculated level. So you see the two contracts to go short here on the E-mini chart, and I went short there. It was maybe a minute or two after 10 o'clock. I'll move this clock out of the way so you can just see the time in the morning. So 10:02, 10:03, something like that. And I just let this trade develop. You'll see the base hit profit target level and the fumble threshold level I added to the SPY chart. Green line is the profit target, the equivalent of 4 points in the ES, and the red line is the fumble threshold. It never was an issue today. They never got up there. Of course, it's easy to see on the E-mini chart. 4 points is roughly the equivalent, 40 cents is roughly the equivalent of 4 points. And with two ES contracts, that's $400. So it didn't take very long for this trade to hand over a base hit within about 12 or 13 minutes from entering the trade, and I walked away with the 4 points. So after this trade was in the bag, there really is not much more to see on this recording. They didn't hit any other levels, so we'll just go back to the full day and take a look at it for one more time. You can see how important the market thought this level was today. Too bad they didn't get to any other levels, but a base hit is a base hit. You generally don't go broke by taking profits on a regular basis. Just let these little base hits pile up. So we'll take a look at some larger time frames now so we can get a bigger picture perspective, but I'm not sure what else to say other than that the prevailing trend, which has been bullish, is still bullish. They closed the week solidly above our level at 518.50. And if you're wondering what the level is above that, it's the 100% Fibonacci price extension from the most recent obvious low on this weekly chart, which is here, to the most recent high, and then this using this pullback right here. So it's a symmetrical move, 22 weeks up, very bullish, and closing above these recent pivot highs on the two doji candles from the last 2 weeks. I don't know what they're doing, especially considering they haven't been this far extended from the 20 period moving average for quite a while. It all remains to be seen. Next week should be interesting. Here is the daily, the 4 hour, 3 hour, 2 hour, 1 hour, the 30-minute, which they got below the 20-period moving average. And you may have noticed on the 1 hour chart, they just kind of went sideways and met up with the 20-period. And for what it's worth, here's a 15-minute chart, the next one down that I use in my series. You get the idea. The party isn't over, apparently. This is where the one trade for today puts us for the week. One down day this week. But overall, a profitable week. And certainly the past 2 weeks have been good. You may recall, if you already watched the recap video for March 12, that I actually weathered the storm on that day and did not jump out at the maximum loss limit. So I was green at the end of that day. Feel free to watch that March 12 video to see how that happened. And on the other day, last Friday, March 15, the Ides of March, I only traded one level. We had two levels that hit. I just took one level, but I rode that short trade down about 20 points. So pretty good 2 weeks for me. Again, if you watch those videos, I believe I explained the reasoning behind why I traded those the way I did. You may be picking up that I don't always trade these levels for just 4-point scalp trades. Sometimes it makes sense to scale in or out of positions and use trailers. Sometimes it makes sense to give a trade more time to develop. And all these parameters are spelled out and shown in the trading course that I'm working on. So if you're curious about the full behind the scenes on all this, just hang tight. I need probably a couple more full weekends to wrap everything up. Hopefully not much longer than that. Meanwhile, if you want the daily levels to try for yourself, I'm still offering those with no strings attached to anyone who's interested. That is, until the trading course and related material are ready to go live. So check the video linked right here on the screen to find out how you can get the levels yourself. Thanks for watching and liking this video. Please consider subscribing to the channel if you haven't already. We'll be back on Monday. Have a great weekend.